Charlie Munger never looked like a financial revolutionary. He didn't predict markets. He didn't chase trends. And he never pretended to be a genius. Yet, alongside Warren Buffett, he helped build Berkshire Hathaway into one of the most successful investment firms in history. Not through cleverness, but through a way of thinking so simple, most people overlook it. Munger believed that investing was not about brilliance. It was about avoiding obvious mistakes. While most investors focused on what could go right, Munger focused on what could go wrong. He summarized this philosophy in just 2 words: invert. Always invert. Instead of asking how to succeed, he asked how failure happens, and then avoided those paths entirely. To Munger, failure in investing was predictable. It came from businesses that were too complex to understand, excessive debt, poor incentives, short-term thinking, and human psychology, especially greed and ego. Remove these factors, and long-term success became far more likely. This mindset didn't produce dramatic short-term wins, but it produced something far more powerful: durability. And nowhere was this philosophy clearer than in one controversial investment. In the late 1990s, Wall Street analysts criticized a retail company for doing something that seemed irrational. They intentionally kept profit margins extremely low. That company was Costco. To most investors, Costco looked inefficient. To Charlie Munger, it looked inevitable. Munger didn't ask how much money Costco could extract from customers. He inverted the question. He asked, what would destroy this business? The answer wasn't competition. It wasn't pricing pressure. It was the loss of customer trust. Costco designed its entire business around protecting that trust. High-quality products, minimal markups, well-paid employees, long-term loyalty over short-term profits. Munger understood something Wall Street missed. This wasn't a weakness. It was a moat. Berkshire Hathaway invested heavily in Costco. Over time, that investment compounded into billions of dollars. Costco became one of the most trusted brands in the world, and its business model proved nearly impossible to replicate without sacrificing margins or culture. All because it avoided the very incentives that destroy companies from within. Charlie Munger often said, "It's remarkable how much long-term advantage we've gained by trying to be consistently not stupid." His greatest advice wasn't about what to buy. It was about what to avoid. Bad incentives, fragile systems, short-term thinking, and unnecessary risk. Charlie Munger didn't win by being smarter than everyone else. He won by refusing to play losing games. And in investing, as in life, what you avoid often matters more than what you pursue. Subscribe to this channel for more timeless advice from the greatest investment legends.